Hey all, Choiboy here. Welcome to another video. Today we're going to be talking about the same old monthly Sharesies Portfolio update for May 2020. Remember, anything I'm going to be talking about is not financial advice, or it shouldn't be an indicator that you should be buying or selling stocks of whatever I talk about here. So please do your own research before you make any trades based on the stock market. So let's get straight into it. You can see that my portfolio balance is first of all 6.6k, so it's grown quite a bit from the previous one. The April update was around 3.6k for what I remember. Now it grew 3k. Out of that 3k, I put in 2k, and this portfolio value used to be around 7,000 at its all-time high, but it dropped down in the past few days. But overall, we're looking pretty good here. So let's get straight into it. Nothing much changed. Out of the 6.6k, 1.4k profit, which is around 26.53%. That percentage would have been a lot higher if I didn't add more money in, but it kind of takes account for all the money I've put into the thing, and it's based on my whole portfolio value right now, which is 6.6, but that number used to be like 40-50%, but it just dropped a bit because of the money I've added. So yeah, so this is pretty much it. It's growing quite well. I don't know if the market's gonna hold this price for any longer, honestly speaking. Some companies been going up like crazy for no reason. I just don't feel too optimistic about the market trend right now, and especially with the government talking about a financial recession and unemployment gonna hit bottom at September. You know, all these kind of things kind of make me a bit unease, because the stock market will start to kind of follow the economic trend. If the economy falls, then the stock market falls a bit after, something like that. It's kind of like the last resort where people take money out of when they run out of money in their bank accounts. You can see that it's exactly the same companies that I bought in April, but instead I just have more money in each one of them. For example, let me just go over the real basics of what changed. Abano, I added another like $400-500. You can see that Abano had a massive growth, around nearly 2 times my money, because I bought it pretty low. Yeah, so I bought it here and I bought some more here, and it hasn't been doing much ever since, right? So it's pretty much at the same price as when I added my extra $400 or something like that, $500, and that hasn't changed much ever since. Bliss, it's been holding a reasonable level. It's hit its all-time high twice, but nothing more significant there. I really don't know where this company is gonna go. The product is pretty solid, but you know, I really don't know what's gonna happen with Bliss, but I think it's just worth holding on to, because healthcare might be a big thing during the recession, so we'll just keep that. Kathmandu is probably like the big one, so I did have only like $500 in Kathmandu originally. It came up a bit, then I added another $1,000. No, not $1,000, $800. I did have like a few trades here. So what I've done is that I put the initial $500 here, which was in the previous update, and ever since then, in late April, I added $1,000. It went up a bit more, and I took out $200 from that $1,000, so I had pretty much a net 800 in. That's mainly because I wanted to have some money freed up for the capital raise for Vista, so I think that was something I took out the $200 for, and I bought a bit more, like nothing significant, just a few dollars from the referrals I've been getting. If you do want to get into Sharesies, please look in the description below. I have my Sharesies referral for you. You get $5 and I get $5. It's a win-win. So please use it if you haven't signed up to the platform already. So Kathmandu, nothing too heavy. It did grow quite a bit. As you can see that we've seen some massive growth. This is when I had $7,000 portfolio. Just not at that range yet. Remember, you're always going to get volatility. It's always going to come down when it comes up, and the faster it goes up, the faster it may come down. So you just gotta be careful. I've been having some friends around me that's been asking if Kathmandu was a good buy around like 8th and 11th of May. I told them it's risky just because it's been growing so much. There might be a profit take and it might take off again, who knows, but it is risky just because it came up pretty fast. It went from 60 cents to 90 cents. That's pretty much like a 50% growth. And not only that, it went even beyond, and it went over $1 at a certain time. I think 11th of May it hit like $1.10 or something like that, $1.12. So it was pretty interesting to see how that went. Plexure, same thing here. I bought a lot more Plexure as well. I've just been buying, and I haven't been doing much with Plexure. I've just been buying more. I think they are going to be pretty well off. They did have announcements of having their financial report out soon on the 18th of May or something like that. So I think everyone was pretty bullish about it. They did mention in a previous announcement in March saying that their revenue is nearly unaffected. We'll have to see. But seems like a really good mid-long term hold for this one here. Vista Group is the funny one. I had a capital raise that happened with Vista Group in April. Yeah, I only had $500 in it, and I added another $156 into it. So total, I put in around $650, and it gave me pretty good return so far. So I pretty much bought up all of the share I was entitled to for the capital raise, and I bought something called like the outstanding or just the over limit. So I bought more than what I was entitled for because they were offering it to you. They're like, hey, here's your 100 shares or so, but also you can buy 40 shares more if you wish to. And I was just like, okay, cool, all right, pretty nice price. So I'll be like $1.05 per share. I'll be like, okay, I'll just buy up the whole lot. So I just bought up everything I could. Pretty much what happened with Vista, nothing much really. Level 2 in New Zealand right now, so I think a lot of companies are pretty bullish about the demand from the consumers, and especially with the cinemas opening for Vista, it's a good news for New Zealand market, but they do have a lot of the overseas market like China and USA. So we'll have to look into that to see if those countries kind of get their stuff together in the short to medium term. So that's pretty much it. I've been looking at a lot of portfolios and giving my opinions about portfolios, and even on the internet I've seen a lot of people over diversifying their portfolio. For example, buying a whole bunch of funds, like 20 funds and like 20 companies. Honestly speaking, I'm not a big fan of over diversification. I am all about diversification. When you're going like past 10 20 companies and you only have like 10-20 bucks in each one of them, I don't think the returns is really that great for the long term. You can be well off by just chucking more money into smaller number of companies. For example, me, I try not to go more than 10 companies, to be honest, and I have a decent amount in each one of them. And remember, each one of these companies, I've done the financial analysis, I've done the product analysis, I did the audience, target audience, their future proof kind of concepts, their business models. I've looked into all that prior to buying all these companies in an extensive way. So I believe these companies will do well. They might not, but I think they will, looking at the facts that are out there right now. And that's how you should be investing. You shouldn't be investing in all these companies that you just heard of, and other people are buying a whole bunch of them as well, and you're like chucking like 10-20 bucks, 50 bucks in each one of them. It's really not the way you should be investing, because in the long term it just doesn't work out as good as you'd expect it to be. And a lot of people invest to make money, and the best way to make money is to pretty much weigh out the risk to reward ratio. When you're buying less companies, you're having a bit more risk, but assuming your research and your information was all correct, then hopefully they have a bigger chance of growing than the other companies. I'll talk about over diversification a bit later, but I am about diversification. I'm not saying everyone should do high risk or medium risk. Some people can go low risk, but if you're gonna buy 10, 20 companies, I'd rather you buy funds, because honestly speaking, if you bought 10, 20 companies, and if they were all growth companies, I wouldn't even say anything. And if you're one of those people, please, I'm sorry, I'm not trying to attack anyone. I'm just giving you my own views on what I think investing should be like. I don't think it should be just pick random companies or just companies you've heard of, without doing extensive research into it. If you're not willing to do that research and study, then I'd rather you have a look at funds, because they will give you pretty much a similar or even better return. This is why I really like the New Zealand Top 10 fund. It's just majority of the economy is run by a small number of companies at the top, and you've got that venture capitals at the bottom, the startups that become that kind of SME and the bigger companies in the next 5-10 years. But those are the kind of the high risk plays you have there. So you just got to mix it up properly. If you're going to over diversify, please look into fund instead. Companies should be relatively small numbers, and just more amounts in them. I think that's the way to go, and that does require more study. So that's pretty much it. If you like today's video, give me that thumbs up, put a comment down below what you thought, subscribe to the channel, and put the bell notification for the next update. Until next time, I'll catch you around. See ya.